One, two, three, four, five, six. So there's 6 of these fourplexes on this street, and they all vary in maintenance and condition. And that's what I don't like about these type of situations is in a perfect world, you would own all 6, you'd paint all 6 the same, you'd keep up on all 6. But again, this owner either prepped it and got ready for listing or has taken pretty decent care of the exterior. But the one on this side is all right, needs a paint job. The other one's definitely, you know, not being maintained or kept up as much. And then you get down there to like the 3rd or 4th one and the roof is shot. I can only imagine what those units look like inside. So this is a street kind of off Portland Ave. You got the Boys and Girls Club and middle school across the street. You know, but the problem is when you own these properties where they're so close, you can really take care of this really nicely, but then you've got this right next door, and this is tough to kind of enforce because it's a different owner, right? Different landlord, different PM or whatever. So, you know, the units aren't that bad in these buildings. The siding looks great on this one. I think I saw an exterior aerial picture of the roof. It probably looks like it needs to be replaced. But at $829, I think these, unfortunately, I mean, 3 years ago, flew off the market, right away. I think these now need to be in the 750, 775 range to make sense. And I know that some of you mentioned that you like the pros and cons I list. I just wanted to step away from, there's another tenant in the building next door. So the cons, let me start with the cons right away. This is off Portland Ave, East Tacoma, very close to the casino. If you're not very familiar with our area, it can get a little rougher. I don't like to use the words good or bad because it's very relative to the buyer or the resident, right? If it's a good area or bad area. These are the traditional 2 beds, 1 bath. They said this is one of the nicer, or I'm sorry, this is not the nicest of the 4 units. So what you see here is very, you know, it's average move-in condition. The baseboards could be replaced or whatever, fixed up. They're getting kind of rusty and junky there. Tenants generally don't even use fireplaces. I see a lot of landlords, they just seal these up, and it's also better for insurance probably to note that you're not allowing the fireplaces to be used. Nice walk-in closet. Your 2 beds, your 1 bath at the end. Does have full side-by-side laundry, which is nice. You don't really see this very often in the fourplexes and the 2-bed apartments. But you know, full tub. Come in here. You're looking out to across the street is Boys and Girls Club, which is actually kind of cool. But there's a lot of trash, a lot of litter around. You'll see more tagging, graffiti on the fences of the properties in this area. This is not my favorite part of Tacoma to invest in. It has an E in the address, so East 56. Doesn't need to be a deal breaker, keep that in mind. But when you see an E in the address in Tacoma, it means it's probably gonna be in this area that's, you know, not my preferred space, but people own investments and rentals in here all over the place. So some people are investing here. The floor is good. I like the flooring. They did a good job with that. And it's a good size unit overall for, you know, a 2-bed, 1 bath. This is about what you get, but it actually has a little dining space. But we can talk about it on my Zoom today at noon. If you join my new weekly Zoom that I'm offering to all investors to join, we can talk about this deal, any deal you want to talk about in Western Washington that I follow. All right, thank you. All right, we're recording. This is the first Western Washington multifamily deal live Zoom that I'm doing every Tuesday at 12 Pacific. And Rebecca and I went out and toured this fourplex in East Tacoma, and you can see a separate video on that. And this is where I just wanted to give anybody that was out there in my sphere, investors, followers, a chance to talk about any deal. I'm talking about this one today because I actually went out and toured it, which I like to do, and check out latest inventory and deals that are available. This was $839. I think I said in the other video it was $829. It's $839. And this is listed by a really good broker, a guy I know. He puts together a really nice, his own kind of marketing pro forma here, spreadsheet of what the deal currently looks like, what it could look like after you rent to. It's a little vague on expenses, but he does note that it assumes a 6% rent increase, even though we're allowed to bump 9.6 for this year. And it assumes being self-managed, which is going to save you 6 to 10%, depending on which property management firm you use. He uses 6.5%. I use this, my form is called a snapshot. This is what Rebecca and I use as kind of a default template when I'm running numbers on deals every day, when I see new properties hit, or I'm looking over some stale ones, taking a look.
I'll plug in the numbers that we get from the listing, and you can see again, Charles is a good listing broker, so he puts in something for insurance, water, sewer, garbage, and total expenses here, the rents, everything, but not every listing has these. So sometimes I have to estimate to, based on experience and based on what I know properties like this run. So I came in, entered the rents, right? This is just my default template, so I'm not customizing this for a specific client right now, but estimating 4% vacancy. That's, I figure maybe if the rents are about 1,300 or so, 1,500 times 2 months, so maybe you have one sit. So you might lose, $3,000 your first year. After that, you probably would not experience it as much. 4-unit property, you don't have regular vacancies. Shouldn't. Property taxes 8,200. Always want to assume they're probably going to go up a little bit. Insurance is quoted a little bit light. I think you're probably actually going to be more like 2,500. Water, sewer, garbage. But here's the good thing on this property is they're billing back water, sewer, garbage to the tenants to the tune of $650 a month currently, which is really good to see. So this stands for Ratio Utility Billing System, RUBS, we call it. It's when you bill back and recapture as much as you can of this water, sewer, trash bill. So it's kind of usually turns out to be not quite this much or it's a wash. So you see the 650 extra and you're like, oh, that's pretty good, but it's really just washing this out. No management. You got to budget something for repairs and maintenance on a fourplex. And I figure, a couple $100 a month, 50 bucks a unit or so. If a dishwasher goes out or you got to need to fix some blinds or whatever. And so your operating expense is going to run, we like to see this obviously as low as possible, but in reality, they typically going to be between 26 and maybe 31% on these small multifamily. And cap rates are more for commercial properties, but we still like to plug the number because a lot of people hear that term and they want to see what the cap is. So that's what produces a snapshot for us. And I like to look at what's the DSCR, the debt service coverage ratio. Lenders like to see, 1.2 or better usually. So if you're doing a DSCR loan, it's got to be 1 or better. But it's just another metric that we look for to see how this deal is penciling as is. Again, please excuse, I didn't totally edit this up to be totally clean to present to a client that still has all the default things, but these are the rents that carried over. The market rents, I bumped up 9.5%, kept the RUBS the same. Anyway, you look down here, looks like day one, day one, worst case, produce about 372 positive cash flow. You're looking at barely 2% cash on cash, but about more like 6.2. And I think they have it listed as about a 6.5 cap. But you could get this thing to potentially, should be by year two, more stabilized, $800 a month, which is more 4%. And that's, I hate to say it, but that's actually pretty good for our area. The downside is this is what we're looking at. The total cash to do the deal is probably about $230,000. And who in their right mind usually wants to invest $230,000 to make 1.94% on their money? Now you're going to have some appreciation, things like that. This is what we think it could probably more look like as an ROI. But really, the cash in your pocket, you could take that 200,000 and put it in a money market and probably get 4.5% without even blinking an eye, and with no headaches and no mess. But you're not going to have any appreciation and things like that. And so these are things we look at. These are the yellow, the highlighted. Thank goodness we all have different expectations. I have shared deals like this with clients that I would never buy, that they want to move on. And then I share deals like this with clients that I think, man, if you don't want it, I would like to take a shot at it, and they pass on it. So it's good that we all have different goals and different metrics that we apply because it's already very, very competitive, as I like to say out there. And so that's kind of how we look at it. Use this snapshot when we present an offer. And by the way, 839, we're never going to offer full price, especially for something that's been sitting. Let me go to this one. Oops. I think it's been on the market 2 months or so. But anyway, so we're not going to offer full asking. We're going to come back in here. We never, what do I say to everybody? We never offer round numbers like 800,000. That looks like you're shotgunning. Whoops. That looks like you're shotgunning for a deal. And no seller wants to feel like somebody's just shotgunning lowball offers out to them. That pisses, trust me, I work with listings as well. And nobody likes to feel like somebody's just not putting much thought into analysis. So we would probably come in here at like 772 and almost got to 1.2. Now Cash flow, cash on cash is looking a little better. It's almost 4%, and it's looking a lot more attractive if you could get it. And you're close to almost a 6.75 cap. So we would come in and I would present this with your offer. Say, I'm sorry, the clients were really trying to get to 1.2 on the DSCR. This is the best we can do. This is as close as we can get it for being self-managed. Current rents in place. We're hoping we can get it, bumped up and maybe start performing at a 6%. But my clients targeting, they would really like to see 4%, but they're willing to live with a little under because they're really interested in the property and hoping we could put a deal together. So we make a case. And I can't tell you how many times listing brokers will go to me and say, thank you for at least sharing where you came up with your number. This is a good analysis, or it helps them share with their sellers what a buyer's looking at and how a buyer needs to come up with $200,000, to try and make 4% on their money. So there you have it. I hope that's helpful. I also, if I'm going to dive a little bit deeper, I'll just tell you some of my things. I go into Rentometer. Real quick, I'll just show you. Oh, that was sorry, I'm gonna get back here. 56, right? 12. I go into Rentometer, put in the address, put in 1,500, which they are saying is the projected rents. Let's see if they're accurate. I think Charles is usually pretty good about his pro forma. Now, again, this is just a baseline rough idea. I guarantee you're not going to get 1,900 for these units based on their location. You can see a lot of reds west of there. We go to the report, and I would share this with you, the client, along with my snapshot. And we look at here, the unit sizes are 938 square feet. So I come in here, I'm going to look at the size, I'm going to sort it by size, and then I'm going to try and compare apples to apples as much as I can here, about 900 square foot units. These are houses. Here's an apartment. May, April, it's a little dated, but 1645, 1795, but these are two bath. So I'm trying to find, there's a 1.5 bath apartment for 1650. So, but based on the condition and that street, that neighborhood, 1,500 is probably, average or conservative. So we would stick with 1,500. But there may be potential, actually, if you really could talk to your neighbors and everybody on that block, clean up their properties, and you could probably all get closer to 1,750. So we use this. We've talked to a PM, depending on how serious you are about the property, how much down the rabbit hole you want to go in your analysis. But we use the snapshot, the Rentometer, look at Zillow, other things, just to make our initial offer. But there's always opportunities usually to consider negotiating something less if you come up and do your due diligence, review the leases, and maybe the agent said it was $13.99 when it's actually $12.99, and that's going to throw off your numbers. And so that's the thing we got to look for, is to verify. Don't just trust what's in the listing or what the listing broker's presenting, because people are human and humans make mistakes, and sometimes we have typos. And anyway, I hope that is helpful. Every Tuesday, noon Pacific, we can look at this one again. We can look at any other one in Western Washington that you like to look at. If you've got something outside of Washington, I'm happy to just give you my 2 cents. I do watch other markets myself and have properties in Idaho. So if you're interested in other markets, let me know, and hope you'll come back next Tuesday. Thank you.